A very good evening to my dear students from across the country who are tuning into the lectures offered by the CA Institute. I hope all of you who are attending today's session have already attended yesterday's session, the chapter pertaining to offenses and penalties, followed by the ethical aspects. In yesterday's class, we had covered in detail the various types of offenses which are covered in the GST and the particular penalties which are applicable to the same. We have also covered the provisions pertaining to the seizure and detention of goods, conveyance, and the respective documents. When the respective goods, conveyance, and documents can be redeemed. We have also covered the provisions pertaining to confiscation of the goods, conveyance, and documents. We had also looked at the provisions pertaining to prosecution. Whenever prosecution is applicable, the monetary limits which are applicable in case of prosecution were covered. So there is one section which is remaining in the chapter pertaining to the offenses and penalties, which basically talks about the compounding of offenses. So what do you mean by the term compounding of offenses? We already discussed in the previous session. Whenever there is any case which is subject to prosecution, the taxpayer may apply for a compounding mechanism where he avoids the prosecution on the required payment of any amount which is determined by the GST department. That is, in brief, the meaning of compounding of offenses. The provision of compounding is there in every legal framework. It is there in every law. It is there in income tax law. It is also there in Companies Act law. So therefore, what here we have to understand is prosecution is a very serious measure which is taken on the respective taxpayers, and it always is a very it is always a very stringent measure. So therefore, that is why the provision of compounding is there, that so that wherever we want to avoid the respective prosecution, where we want to avoid this imprisonment, the stigma of imprisonment which is attached to us, there is a last resort which is given to the taxpayer. This last resort is there in GST in the form of compounding, which is covered under section 138. So, but here also there are certain offenses which are covered and certain which are not covered. That is what we have to remember. Some offenses are very strict, so therefore they are straight away not covered under the compounding of offenses. So therefore, let us look at what exactly the section says. So as per the provisions of 138 subsection 1, any offense can be compounded by the commissioner either before or after the institution of prosecution. So even after the prosecution is instituted against the taxpayer, the compounding can come, or even before the institution of prosecution also the compounding can come upon payment of such compounding amount in manner as may be prescribed. Again, the compounding of offense can be compounded only on the payment of amount. Just because he is making an application to the commissioner, it doesn't mean without payment of any amount, the offense will be allowed to be compounded. He has to pay some amount, and only after that amount is paid by the respective person who is accused of the offense to the central government or the state government, as the case may be, the compounding shall be given. So what is the process? First, application is made by the applicant to the respective commissioner. After the application is made, what the commissioner does is he calls for a report from the concerned officer, because compounding application is not made to the adjudicating officer. There are two persons here. One is the adjudicating officer or the proper officer who is in charge of the case, who issues the notice, takes your submissions, and accordingly passes the order. He need not necessarily be the commissioner. There are very assistant commissioner. He can be a deputy commissioner. He can be any officer as such, based on the scale of offenses which are covered in the GST law. But the law is very clear. The application has to be given to the commissioner only. Once the application is filed with the commissioner, what the commissioner does, he will contact the concerned officer. He will call for a report with reference to the particular. So whatever details are given in the compounded application, he will go through that and he will call for a report from the respective officer, which he considers relevant for the examining the application. So that is why this is very important. Once he is satisfied that the taxpayer has cooperated in the proceedings before him and fully he has disclosed the case, he may allow the application indicating the compounding amount. So he has to specify the compounding amount. On the payment of this particular amount, your offense is compounded, and in this particular situation, there is no requirement of any prosecution here. The offense is compounded by paying that respective amount, and he will also grant him immunity from prosecution. Or this is one aspect. So two things the commissioner can do. So what happens is, first the application is filed by the taxpayer to the commissioner, step number one. Step number two, the commissioner will contact the proper officer for a report of the entire case. He will examine the entire case, and then number three, he will pass an order. How will he pass an order? He will either allow the application and say that if this taxpayer pays this particular amount, I will compound his offense. That is one thing what he can do. The second thing what he can do is he may reject the application, but there is a time limit for that. So 90 days time limit is given. Whenever the application is received, within 30 days, he has to reject the application. Fine. So this is basically what is mentioned in our 138 subsection 1. Good evening, Viraj. Good evening, Shailesh. Good evening, Satish. Good evening, Namrata. I hope all the others also yesterday who had attended are attending today's session. Viraj, you had mentioned yesterday you were finding it a bit tough, but I hope you revised whatever we have read. In case of any gaps, please let me know so that I can address them for you. And others also, yesterday's session, wherever there are any gaps, please feel free to ask. Of course, at the end of all my sessions, I will also give my email ID. So in the course of revision also, if you feel you're getting stuck anywhere, you can please shoot out an email. I will be more than happy to respond and clarify your queries. Fine. So that was this compounding 138 subsection 1. Moving forward. Now, there are again certain rules here. As always, principle of natural justice has to be followed. Just because it is a compounding application, you cannot, the department cannot just take the application and blindly pass the order. The department has to look at what are the contents of the application. He has to give an opportunity of being heard to the applicant. So without giving an opportunity of being heard to the applicant, you cannot decide on the application, right? So therefore, this is very, very important. And another important point is, two important points here. First one is opportunity of being heard has to be given. Number two, in case he is rejecting the application, he has to record the grounds of such rejection. When I say grounds, what do you mean by the grounds of rejection? Reasons. There is no term used as reasons in the appellate regulations and the compounding applications in all the legislations. Always the term ground is used. Grounds of appeal is used in income tax. Same way, any appeal, whichever you are filing under any legislation, the grounds on which you have to file, that is the reason, the issues on which you file the appeal, that is known as the grounds in this legal terminology. Then also the next important, very, very important point, the respective tax, interest and penalty. See, when it comes to compounding, if you want to evade the prosecution, the bare necessary aspect here is that your tax, interest and penalty has to be paid, right? So therefore, without paying that, the application only will be not allowed to be made. Very, very clear. So tax, interest and penalty, these three items have to be paid with respect to the rest of the notice and order which has been going on, and only if this amount is paid, only then in that particular situation the application will be allowed to be made. Then what happens now? What happens if the commissioner decides on the compounding amount and he passes the order and gives the applicant the order? The commissioner will give the order specifying the amount which is required to be paid. Then what happens is the applicant within a period of 30 days time limit is given, okay, for the purpose of payment of the compounding amount. Fine, very, very clear. So compounding, what are the steps? Application to be made, commissioner will accept or reject the application. If he access the application, he will mention the amount which is required to be paid in the order what he is passing. And once that applicant receives the order, within 30 days from the date of receipt of the order, again, here very, very important point is date of receipt of the order. So therefore, order, always any orders which are passed by the government officers has an issue date and has a received date. Issue date means the date on which the order was issued by the respective officer. Receipt date is the order will either be uploaded on the portal. In case it is uploaded, then usually the issuing and the receiving will be the same. But sometimes the order will be couriered to the respective registered address of the taxpayer. In that particular situation, the date of receipt of the order is important for us to understand. The date of receipt of the order is to be taken as consideration for the purpose of determining this 30 days. And also another residuary point, in case the applicant fails to pay the compounding amount. Okay, if he fails to pay the compounding amount, then within 30 days, the order of compounding shall be vitiated. Vitiated means nullified, and it shall be void. That means it is down, that does not have any effect, because he says you can compound the offense if you pay the amount within 30 days. But within 30 days, if there is no amount which is required to be paid, then of course the order of compounding does not have any relevance whatsoever. Okay, now you will have to open your study material because and refer to these particular sections, because this 138 section gives the details with regard to certain aspects which are mentioned. So therefore, I would request you all to open your study material. I will just tell the page shortly. So once you open the study material, straight away go to the end of the study material. I'll tell you the page number on just a moment. 138, 21.42, 21.42. If you go to the not 21.42, I'm sorry. Let us go to 132, because this is anyways reflecting in the slide. Please go to section 132, which is there here. I will mention the page number. This is 21.33. Just go to 21.33 because he is referring the respective clauses. So therefore, it is important for us to understand what clauses are being referred here in this particular section. Now let us go to the section and see what he is telling. The following offenses shall not be compounded. The following offenses shall not be compounded. What is the offense? A person who has been allowed to compound once in respect of any of the offenses mentioned in clauses A to F, H, I, and L of 132 subsection 1. So if you go to the respective study material, you can see what are this mentioned here. Supply without invoice is A, issue invoice without leading to wrongful availment of ITC, then availing as per that. And fourth one is collecting amount but not paying beyond a period of 3 months. A, B, C, D, even E and F are covered. Okay, just go through that. For evasion of tax or fraudulently obtaining refund, falsification of records. Okay, then I, H, I, and L also are covered. So in these particular situations, once if he has already compounded, second time he will not be allowed to compound. Okay, so here a person who has been allowed to compound once, this phrase is important here. Okay, this phrase is important here. Once he has been allowed to compound, second time he will not be allowed to compound in case of the offenses which are mentioned in 132(1), these particular clauses. Second type of offense which shall not be allowed to be compounded is a person who has been accused of committing an offense under 132 subsection 1 clause B. Again, 132 subsection 1 clause B speaks about issue any invoice or bill without supply of goods or services, or both made in violation or the rules made thereunder, leading to wrongful availment or utilization of input tax credit or refund of tax. So therefore, in this particular thing also, the compounding will not be allowed. So therefore, a person who has been accused of committing an offense under 132(1)(b), because input tax credit, as I told yesterday also, is the heart of GST. So therefore, if you are making any offense with regard to input tax credit and that particular amount is a substantial amount, definitely it is being not fair to the government. So therefore, that particular offense also is not required to be. He cannot compound that particular offense. And a person who has been convicted for an offense under this act by a court. So if a court has already been convicted, okay, for already being convicted for any particular offense, he also cannot do it. And any other person or class of persons as may be prescribed. And after the payment of tax interest penalty only, the compounding will be allowed. And any compounding allowed under the provisions of the section will not affect the proceedings if any instituted under any other law. Please bear in mind, if the person has committed an offense which is getting triggered a penalty as per GST, and apart from the GST, as per Code of Criminal Procedure also separately, there is getting triggered a penalty. Just because he is compounding that particular offense here, it does not mean he is free from the penalties of other legislations. Those penalties will continue to apply. So therefore, in this particular situation, the compounding will be allowed. But just because it is allowed here, it does not mean that it will be allowed under any other legislation also. So I hope this point also is clear. Then, what is the amount of compounding of offense shall be such as may be prescribed. The minimum limit. Now, how much amount is to be paid for the purpose of compounding is totally dependent on the respective commissioner who is adjudging the compounding application. He is the person who has to decide. But that being said, there is also a lower limit and upper limit which is prescribed in the provisions. So therefore, the minimum limit is 25% of the tax involved. Upper limit is 100% of the tax involved. So these two limits are prescribed for the purpose of determining what is the amount which is required to be paid by the respective applicant. I hope 138 is clear. Any queries, please free ask. Yeah, I will zoom it. I just wanted to check some of the spellings and the flow of the provisions. That is why I'll just zoom it. I'll just zoom this as well. Let me know if it is clear now. Let me know if it is clear now. Yeah, some other query. Accused means a person who is accusation. Accusation, the word, the literal meaning is basically if you have done something wrong, as per the required evidence, available evidence and documentation, it looks that you are the person who is committed. You are the person who is responsible for committing that respective offense. That means you are the accused person. That means you are the main person on whom the penalty is levied. Accused, accusation is something which the responsibility of committing the offense is made on that particular person. That means he is the accused person. I hope you got clarity on what does it mean. Now, what happens after paying the compounding amount is what is covered in 138 subsection 3. So the moment the compounding amount is paid as determined by the respective commissioner, no further proceedings will be initiated against the accused person in respect of the same offense. Okay, that means what? Once he pays the compounding amount, that means further proceedings you don't issue against that particular person. And whatever proceedings you have already initiated, it will stand abated. Abated means nullified. It will become zero. Okay, so therefore, in this particular situation, proceedings will not be initiated in respect of the same offense. This is, again, this is important here. So this is a point, same offense. This is what is important here. Same offense, it will not be, again, it will not be initiated. And whichever criminal proceedings already has been initiated, that will now stand abated. It will no longer exist. Fine. So that is another important point. Then sometimes what happens, this when in the course of the compounding application, this applicant may give some incorrect submissions, due to which the commissioner erroneously will feel that, okay, this person can pay the compounding amount and will again issue the order for payment of compounding amount. So in this particular situation, if such an immunity is granted, it can be withdrawn anytime. That means what? Later, if he finds out that this person is this compounding application, he has mentioned some lies or he has not mentioned the facts, then or he has concealed any particular material particulars or has also given the false evidence, then immunity will be withdrawn. And after that, again, that person will be tried for the offense with respect to which the immunity was granted, or for any other offense also will be granted, and all the provisions will apply as if no immunity has been granted to that particular person. As if no immunity is granted to that particular person. I hope it is clear. So that was your last provision, which spoke about the compounding of offenses. Now we come to one of the very, very interesting topics under the GST, and which I feel is one of the master strokes, and my sincere appreciations to the CA Institute for getting this topic in the GST level. Because what happens always when it comes to professional ethics, see, all of us take this CA course. Why do we first of all join CA? This is one of the basic questions what all of you will get faced in your life. Whenever you join CA, when your friend or your distant relative comes and asks you, what are you doing? And when the moment you say the word CA, the first reaction is, oh, that's a very tough course. And how are you doing? And how many attempts is one another irritating question which all of us get asked in our lives, because the CA exam is always synonymous with the number of attempts required to pass the examination. But again, one thing what every one of us should know and should always remember is the moment we pass our application, the moment we pass our examination, the journey begins only then. The journey begins only then. This is basically a way where all of us will pass at the end of the day. I'm very, very confident. If you give your proper time and basic efforts, you will definitely sail through and join the club of the thousands of chartered accountants who are there in the country at the moment. But the most important point here is the journey begins only then. Now, when I speak about journey, it doesn't mean the amount what you will make from a job or the amount what you will, the salary packages like the big four or the industry, the multiple cases. I'm not talking about that. The journey of you as an ethical human being begins. I know all of us are ethical in our own way, but with the moment you have the CA tag with you, the onus is on you to be ethical in your daily life, not only in your CA practice, not only in your profession, but in general, the way you deal with people, in general, the way you deal with people needs to be a more ethical manner. Because always you should remember that you are representing the institute in all the ways possible. If you go watch a movie, you're representing the institute. You go play a game, you're representing the institute. Always you remember, because the prefix CA is added here. So straight away you have one responsibility to be an ethical person. Fine. So that is one very, very important thing what you have to keep in mind. And I'm very, very happy that this particular topic has been added to the GST study material. This particular topic was not there earlier. Why this has been added, that also I will tell you. Over the period of the last 6 years of which GST was there, we have seen multiple cases where certain CAs who become greedy for more money or due to lure of this thing. I have seen myself in my personal life also, where few clients have come to me and have spoken about how this person has done and all of that. So therefore, I've seen multiple cases where the CAs become greedy, and due to which they commit all sorts of offenses, due to which again the institute takes disciplinary action. So this is why this particular topic is being given here in our syllabus, so that we understand the ramifications. When I say ramifications, we understand the impact, what happens on a CA in case he gives the wrong advice. So therefore, this is what is important. So why are ethics important in GST? And this particular chapter has been added with 4 case studies, which we will discuss in today's session as to what all types of suggestions may be given by some consultants to the clients, and what are the risks he faces in the business, in his particular business, is what we have to what we will see in those respective case studies. So therefore, for any functioning of the taxation system, the ethics are very, very important, and it contributes to increased regulatory compliance and reduced tax evasion, which leads to increased revenue collection. So the moment you're ethical in your business, the moment you pay the taxes on time, the moment you claim input tax credit as per the rules given in the GST law, straight away the tax amount goes to the government. See, we are not in control of what the tax amount is utilized for. That is the government's business altogether. Many people will have different opinions. We are paying so many taxes, but where the government is spending, it is not spending anywhere. So why this is, but that should not become a reason for you to commit an offense. You cannot justify just because you have your view on the government in such a way that I am paying so much GST, but the roads are still bad. I am paying so much GST, but I'm not getting electricity. This is not the way you analyze and give the logic, saying that just because I'm paying the tax and not getting the facilities, therefore I commit the offense. So that cannot be justified in any way. So you, from our side, we have to be ethical and let the government do whatever it can do in their own capacity. Also, it helps in creating a fair, transparent, and trustworthy tax environment, reduce uncertainty that supports economic growth and development. So therefore, there is the environment as such is fair, and also you will not have anything to worry. Otherwise, if you do something wrong, it will always keep playing on your head, and one day suddenly it will burst on our face. That becomes very late and it becomes very difficult, and a lot of issues are involved, wherein the standing in society will become changed. A lot of people may think negative about you. The image of a person as such will change a bit. So what are the unethical practices which are usually being there, like issuing bogus invoice, that is without supply of goods, you issue the invoice, you avail the input tax credit without any purchase of goods. In this case, tax revenues also get affected, and the honest taxpayers who are actually paying the taxes on time, it is and claiming the input tax credit as per the rules. So for them also it is not fair, because they are diligently paying their taxes on time. Also, the moment you have an ethical behavior, you will not have the headache of someone issuing an order, asking you to pay the tax interest penalty, and asking then you going on appeal. All those things can be very much avoided. So therefore, if you see here, the professional behavior, it is there in your auditing chapter. Toughest examination in cheapest cost. Yes, very true. Very true. That's why the kind of amount what we spend on our education is peanuts compared to the other courses which cost a bomb. So definitely it is the toughest course in the most reasonable cost, and but again, a lot of responsibility also comes along with that. That is what is important at the end of the day. So therefore, professional ethics as such is, I think, a chapter in advanced auditing, wherein you already have a detail about the code of ethics, but usually it is, as students we just see we see that as a chapter. But my also your humble suggestion is, apart from viewing that as a student, when you're reading those, also imagine yourself to be a qualified CA and the kind of rules and ethics you have to maintain in the profession. So therefore, code of ethics is anyways there. The fundamental principles are integrity, objectivity, professional competence, due care, confidentiality, and professional behavior. Integrity is very, very important. Okay, what is integrity as such? Can anyone tell me what is the word integrity? It is very simple. Whatever you believe has to be true and fair. Okay, whatever you believe has to be true and fair, and there is no way in which you can deviate from the accepted legal principles. As simple as that. Objectivity. You must be objective in your analysis. You cannot take sides just because one client is there. That client is a very big client. He will come. He will tell you. I mean, lot of such clients are there. They'll think that whatever it is, we will certify. He will come and tell you, please certify that my projected revenues in the coming 5 years are 100 crores, 200 crores, 300 crores. End of the day, we will if some CA goes ahead and certifies that, he'll say no, the CA will say no, I cannot certify because I don't feel your business has the capacity to earn so much money. But he will say no, the bank is asking. He will give a some sort of a sly warning. He will say no, then I will change my CA, and then that existing CA will get scared. Oh no, I'm losing a client. These are practical things what happens. So therefore, in that, and he may get tempted to sign on that, or the client may offer a percentage of the loan, whatever comes. I am getting a loan of say 10 crores. I'll offer you 5% in case you sign this. These are the kind of tactics which certain clients use to lure the chartered accountants, but you have to be objective. You should not get tempted. If you have such a client, that means it is not good for you. That is not good for you. It is better you tell no to that client and you put double the efforts in getting much more better clients. Okay. So in such cases, always stay a strict no. So that is objectivity. Professional competence. Learning doesn't end with passing CA final. Let me tell you, my dear friends, it does not end in case of a CA professional's life. As I told you, the journey just begins. The journey just begins. It is even more tougher for you to keep updated with the respective recent developments once you pass the examination, because you will be busy in your daily life. You will again get married. You will have children. You will have multiple things on your head. You will not have the time what you have now to study and keep yourself paced with the next level development. So professional competence is very, very important. That is why the institute also organizes CP sessions for all the members. Continuing professional education also gives the certificate courses in GST, certificate courses in direct taxes, company law, forensic audit, multiple aspects. So therefore, keeping yourself engaged, keeping yourself updated in the developments, you need to have the professional competence to advise the respective clients. Confidentiality is another critical thing. You just cannot talk about a CA who says that this particular hotel, huge hotel, is my client. I'm doing his audits in the past 10 years. Never do that. Never do that. Confidentiality. Don't try to publicize your clients in your friend circle or wherever you want. This confidential information. You even in the website, if you see a chartered accountant's website, will never have the name of the client. Only the sectors where they cater the services are mentioned. Right? So confidentiality and professional behavior. Again, professionalism, I would all urge you to read this book called The Professional. The name of the book itself is called The Professional. The author is one Mr. Subroto Bakshi is the author. So please read this book. It's a wonderful book on the hallmarks of a professional. What exactly the term professional means. What does it mean? If you say that in the morning I'm coming at if the morning there's a meeting with the client at 10 o'clock, you need to be there sharp at 9:45 or 5 to 10 minutes earlier. That is being a professional. Excuses like traffic, excuses like multiple other things are not there for a professional. When you are a professional, you should stick to certain basic principles in life. There is no negotiation with that at all. Also, a CA needs to follow ethical conduct when discharging his professional duties like compliance. See, multiple certifications are there. We will also see in the various sections where the certifications are required. So certifications, reports are there, advisory roles are there. All these he has to follow the ethical conduct by adhering to the set of principles which promote the integrity, transparency, and compliance. Also, professional knowledge and skill has to be maintained to ensure that the client or employer receives the proper competent professional service based on the applicable positions. Also, crucial role in ensuring GST compliance with the client organizations. Now, in case you are a CA, you are working as a CFO in a company, you are responsible for the GST compliance, you have to make sure you are on the right side of the law, because as you saw, you yourself yesterday we saw what are the offenses. So therefore, as a CFO, you cannot afford to be relaxed with the GST compliances. You need to know the provisions properly and make sure that the client is following the same. That usually the CAs are responsible. In case of big companies, they appoint CAs, or in case of small and medium companies, they appoint a practicing CA to take care of the GST filing, take care of the GSTR input analysis, annual return, and all those things. Also, another responsibility of the CA is to act as a tax advisor. So apart from basically taking care of the GST compliances, the CA should also look at advisory from the GST point of view as to when the input tax credit can be claimed, when it cannot be claimed. All these things, the advice has to be properly given. Moving forward. Now, what all can a CA do in the GST? Why is the CA's role important in GST? The chartered accountant can appear as an authorized representative before GST authorities. Now, once the GST department issues a notice telling that we feel that you are supposed to pay this particular amount, that you have claimed wrong input tax credit, you are supposed to pay this amount, you have to pay this amount in 1 week's time. If you don't, if you think that you don't want to pay this amount, you can present your submissions either by yourself or through an authorized representative. This is what the line reads. So the moment authorized representative is there, the power is given to a cost accountant and a chartered accountant under the GST law for being authorized representatives, and they can represent the client. They take a power of attorney from the client where the client gives the authorization and he represents the case on behalf of the taxpayer. Also, certifications have to be given on various aspects. What are the various aspects on which certifications are given? We shall go through those as well in the next few slides. So a lot of care and diligence has to be exercised by the CA, and yeah, that's about it. This we've already covered. Again, code of ethics has to be there, and also SQC1, the standards for quality control for firms that perform the audits. The standards are issued by the Accounting Standards, Accounting and Auditing Standards Board. So there we have to look at these particular standards as well and comply with the ethical requirements with regard to whatever is issued by the CA Institute. Now, let us look at the various sections where the certifications are mentioned by the certification, or the reports are to be furnished by a CA. One type of reports furnishing is there under section 18. Can anyone tell me what is section 18? Okay, section number you may not remember, but how many of you can tell me in this particular situation, when I talk about section 18, when I say a person who has applied for registration and he has granted some registration, what exactly happens? So basically my question is, when it comes to input tax credit, okay, I have purchased some products, and paid GST on that. Okay, that time I was not registered, and later I got myself registered. Okay, in that case, what is the impact of GST? Because input tax credit chapter is over, I'm asking you, can anyone just put in your thoughts, just whatever comes to your mind? Because I just want to know the whether you are aware of this or not. Based on that, I will tweak in the way in which I'm talking about this. So therefore, my question is, what comes to your mind when I say, when a person is not registered and he has purchased some goods and later he becomes registered, will he get input tax credit or not? This is my question. What comes to your mind? Just give me your views. Any answers? Section 18, input tax credit chapter. Again, I'm telling my question. When you don't have registration, you later apply for the registration, what is the impact of input tax credit? Revised invoice. Okay, revised tax invoice, stock lying on the date liable to registration ITC on that amount. Amrita to some extent is correct. So therefore, Satish and others, please kindly revise section 1718, very, very critical chapter from your examination point of view. Okay, there is no input tax credit, you need to be thorough. Okay, so I'll just tell you in brief, is basically what happens is when a person is carrying on a business. Okay, and he becomes liable for registration. When does he become liable for registration? When the turnover crosses the threshold of 20 lakhs or 40 lakhs. So therefore, when he becomes liable for registration, otherwise I'll just give you an example so that you understand it more clearly. I'll give you an example here. Mr. A is carrying on a business, okay, and turnover crossed rupees 20 lakhs on 1st December 2023, or rather I'll tell 1st November 2023. Fine. Then Mr. A applies for registration. Okay. During November 2023, Mr. A purchased stock of raw material amounting to say 1 lakh and paid GST at the rate of 18%. Now, what is happening? So, what does this section say? A person who is applied for registration within 30 days from the date on which he becomes liable for registration, and he has been granted such registration. Okay. Now, what is happening in the example here? He applies for registration. Okay. Registration granted on say 25th November 2023. Okay, same thing is happening. So what does it say? He becomes liable for registration when? He becomes liable for registration on 1/11/2023 because the threshold 20 lakhs has been crossed. So who has applied for registration from the date on which he becomes liable. So he became liable for registration on 1st November. Did he apply within 30 days? Definitely applied within 30 days because the registration itself came on 25th November and has been granted such registration. In that case, inputs held in stock the inputs contained in semi-furnished or finished goods the day preceding the date from which he becomes liable to pay the respective tax. So therefore, in this particular situation where his turnover is crossed 20 lakhs, okay, this one I will make it October, not November, October. Okay, this stock was lying on in the books as on 30th 10 2020. So the date on which he becomes liable to, when he becomes liable to pay the tax, when he's become liable for registration. So if this stock is still there, this 1 lakh stock on 30th October 2023, a day preceding the date on which he becomes liable for registration, then those goods are entitled to input tax credit. He can claim the respective input tax credit. I hope you got the point. Similar second point is person who is not required to register but obtains voluntary registration. That means his threshold is not being crossed but is going for voluntary registration. In that case, he will apply for the registration. The moment he gets the registration, one day before that, whatever inputs are held on that, he can claim the respective input tax credit. I hope you understood section 18. Since this is, I'm presuming this section is already covered. That is why I'm not going into detail. But in brief, for people who are not aware of the section, I just wanted to tell what the section all about. Fine. So therefore, now we come back. So basically why I'm referring to this section here, because in this particular section, when this input tax credit has to be claimed, there is a role of a CA. That is why I mentioned this particular section. Similarly, section 18 also covers the person who was under composition scheme before, later he shifts to regular scheme. In that case also, whatever inputs which are held in the stock and capital goods also. So here capital goods are also covered here. So therefore he was under composition scheme and later he came under regular scheme. So whatever is holding in the stock, on that he can claim the respective input tax credit. Similarly, registered person whose exempt supplies become taxable supplies. The rate was exempt when he was registered, it was exempt, but later it became taxable. Then also he can claim the respective input tax credit. This is basically section 18. Please refer to section 18 so that you understand clearly. So in section 18, how the procedure follows is, in all those cases, the tax person, the registered person has to make an electronic declaration in ITC 01. ITC 01 is the form which mentions about the declaration. In that he has to mention the stock, etc. within 30 days, whenever he is eligible to file the ITC, he has to file. This is the important point here. If the claim of ITC relating to CGST, SGST, ITGST, UST put together so exceeds 2 lakhs, declaration needs to be certified by a practicing CA or a cost. This is why this section I am got. You were wondering why sir talking about input tax credit chapter in the ethical aspects chapter. Because wherever the role of a CA is involved, I'm highlighting that. That's what is in the study material also. It has been highlighted. So therefore, this particular situation, this 2 lakhs amount, wherever it crosses 2 lakhs, on that the CA certificate will be required. Declaration has to be made and it has to be certified by a practicing CA or a cost accountant also. So what the CA has to do? He cannot blindly certify. He has to make sure, examine the books of accounts documents, provide a reasonable assurance that amounts declared are accurately drawn. What if he gives a wrong certificate? What happens? What is can anyone tell me? Whoever has attended yesterday will be able to answer this question. If that person is availing the input tax credit, he should not have supposed to be availed the input tax credit, and even the CA has given the certificate declaration that he can claim the input tax credit. What is the impact on the CA? Can anyone answer? What is the impact on the CA when he gives a certificate, even though he knows that the particular taxpayer is not eligible for input tax credit? What is the implication on the CA? What is the implication on the CA? Some answers I'm waiting. So here, and look at the answers as well. But here, the main implication on the CA is he will be subject to penalty under 122 because he will also come under the aiding or abetting the offense which is committed. So therefore, you know that the input tax credit cannot be claimed, but still you have certified. So therefore, you have aided, you are abetting the wrongful claim of input tax credit. So therefore, you will also be penalized. That is the impact on the chartered accountant if he signs the certificate, knowing the fact that professional misconduct is always there. It is an offense, exactly. It is an offense under section 122. It is an offense. That is what is an important professional misconduct that comes under the Chartered Accountants Act 1949. For that, anyways, our CA Institute will issue a disciplinary notice and will take disciplinary action against him. That is anyway separately done. But apart from that, also this aspect is there wherein he will be penalized under section 120. Aiding or abetting the offense will be penalized on that particular section. Now we come to a second case, 18 subsection 3, where the CA certificate is essential. 18.3 speaks about the certification that a sale, merger, demerger, amalgamation is done with a specific provision for transfer of liabilities. Now what happens? What does the 18 subsection 3 say? In case of sale of a business or sale of a company, in case of merger of a company, demerger, amalgamation, etc., whatever ITC which is there unutilized. So, what happens whenever a person claims the input tax credit and it does not adjust it against the GST or outward supply, it will be sitting in the electronic credit ledger of the taxpayer. And whatever unutilized amount is there, that input tax credit can be transferred to the new entity. To the new entity will be transferred, whichever the sale demerger happens, whenever the new entity is formed, to that it will be transferred, but there has to be a specific provision for transfer of liabilities in such case of constitution. So transfer of liabilities point has to be there, that condition. This has to be certified by the CA. So this change of constitution for claiming the respective unutilized ITC which is there in the electronic credit ledger, he has to furnish via ITC2 on the GST portal. He needs to submit a certificate wherein the CA has to say the change in constitution has been done with a specific provision for transfer of liability. Now, why this certificate is important? When you are doing a merger and there is any GST payable, that also has to be paid by the new company. That is why transfer of liabilities provision is important. If you want to claim the credit, make sure that if there is any liability, those liabilities also get transferred to the new company. That is why, and for this point has to be certified by a CA. Another important case is refund claim. So section 54 talks about refunds under GST. As yesterday also few people answered when I asked, the refunds are the refunds will be applicable in case of zero rated supply, that is export of goods or services under letter of undertaking, and also inverted duty structure wherein the GST rate on your outward supply is very less and the GST rate on your inward supply is more. So in that particular situation, inverted duty structure also refund can be applicable. So here a certificate in Annexure 2 has to be issued by the CA. The RFD 1 is basically the refund application form. It is an online form which is filed with the jurisdictional officer. In the RFD 1, he will have to mention the details of input tax credit, what he has. In case he has both the domestic turnover and export turnover, proportionate input tax credit has to be claimed. And apart from that, the annexure 2, the certificate has to be mentioned that the incidence of tax, interest or amount claimed as a refund has not been passed to any other person. There is no unjust enrichment in case of the applicant in case where the refund exceeds 2 lakhs. That means what? This input tax credit, what he is claiming, he should not have passed on the benefit to, to anyone else. There should not be any unjust enrichment. You cannot claim the input tax credit and pass it on to someone and again claim the refund also. That is not practically also possible. So this certificate for more than 2 lakhs, this refund is genuine. This refund is genuine. If the respective person is able to certify that, then it is fine. We will see a case study pertaining to refunds only in our discussion today, where you will see why the involvement of a CA is important. It is not just checking your GST returns, etc. You have to see what is the agreement, what is the transactions between the taxpayer and his client. Only then you have to issue the certificate. So you have to properly examine the books of accounts, all the documents or records. In fact, I would say that entire refund claim should be thoroughly checked, and also he has to get a proper assurance that whatever tax interest which has claimed as a refund has not been passed on to any other person. Fine. Also, so first we have seen the input tax credit where composition scheme was there. He comes into regular scheme. In that case, he can claim the input tax credit. Now, this also is being taken from 18(4) and 29 subsection 5, that in case of GST registration cancellation, the ITC, whatever you have claimed, has to be reversed. Or when you are switching to the composition scheme from tax paying status, that is, you were under regular tax paying status and you are now shifting to the composition scheme, then just as how in the first case he gave the benefit of input tax credit, now he says that the input tax credit, whatever you have claimed when you're under the regular scheme, you have to reverse it. So 29(5) talks about reversal of ITC. Whenever you're cancelling the registration of a person, ITC has to be reversed. And also when any regular registered person who has availed the ITC, he shifts to the composition scheme, then also ITC, whatever he has claimed, has to be reversed. Any further queries, please feel free to let me know. And also ITC should be reversed proportionately. So whenever he has claimed the input tax credit, accordingly he has to proportionately invoice wise you have to reverse it. If invoice is not available, sometimes what will happen, you will have input tax credit lying in your system and you go to the composition scheme, but you will not have the invoices mentioned because it will have old invoices. In that case, you have to take the prevailing market value and accordingly reverse the respective input tax credit. Okay. I hope all this has been covered in your ITC chapter. And I'm referring to this provision only because the CA certification is important, and how the CA has to certify. He has to examine all the books and records and accordingly have a correct picture of whatever ITC has to be reversed. He should make sure that whatever ITC is there, everything needs to be reversed. Everything needs to be reversed. I hope we are clear with that. The next one talks about audit report under section 66. Now, when GST law first came into existence, there was in your articles also. I don't know. I'm not sure whether any of you have done, but a few must have definitely done. The annual return is basically required to be filed under GSTR 9. GSTR 9, for which the due date is incidentally December 31st, 2023. So now, apart from this GSTR annual return, there is a reconciliation statement which is called GSTR 9C. Now, this GSTR 9C, earlier when the GST law came, it gave certification powers to the chartered accountant and the cost accountant. GSTR 9C had to be certified by a CA, only then it could have been filed. But later, what happened over a period of time? I don't know, for whatever reasons the government knows, they have removed that power from the CA. So therefore, the GST audit, which was there earlier, which said that a reconciliation, what is that reconciliation statement? GSTR 9C is a reconciliation statement between the whatever turnover is there in the audited financials versus whatever turnover is there in the GSTR 9, that is the annual return. If there are any differences, why the differences are coming. That is the reconciliation statement that is there now also. But one sad point, if you may say, from the professional's point of view, is the power to certify has been taken away. It is no longer there. But if you ask my personal opinion, I'm very, very happy that it is removed, because it had a huge responsibility on the auditor. Because the auditor, the chartered accountant, should ensure total compliance of the GST law by the taxpayer for certification of the reconciliation statement. Therefore, that is not possible, because what happens is all the company audits, income tax audits, all that take place by the month of September or October. The person is too saturated. He will not give the information on time. The client will not give the information on time, and you will have to certify something which is extremely risky. So therefore, my personal view, I'm very happy that the certification has been removed. So only self-certification now, that is the taxpayer himself will have to certify the reconciliation statement in the GSTR 9C. So that was there earlier. That is why that point is not coming here. The audit power has been removed. But there is an audit report under section 66, which is basically a special audit which is required to be conducted on any of the taxpayer. In that case, what happens? A CA may be appointed by the respective GST department itself, and he can take the assist in the special audit. So therefore, this is covered under section 66, which provides that at any stage of scrutiny, investigation, etc., any officer not below the rank of the assistant commissioner, taking into account the nature and complexity of the case, if he is of the opinion that the value has not been correctly declared, the value of the goods or services have not been correctly declared, or credit availed is not within the normal limits, then what will happen is he will, with the prior approval, he will issue a direction to the registered person to get his records examined and audited by a chartered accountant or the cost accountant. Fine. They will submit the report duly signed and certified within 90 days. So 90 days time limit is given for this special audit. This is also in the common terms is known as special audit. So the special audit report will have to be submitted within a period of 90 days to the assistant commissioner, mentioning the particulars as to be specified. So this also is one point where the CA has immense responsibility, because here the government, the department, GST department also has faith in your abilities, and therefore it is asking you to do the audit and taking your assistance. Now, this 90 days can also be extended. Usually 90 days is the period which is given for the completion of the special audit, but it can also be extended by a further period of 90 days whenever application is made by the chartered accountant for any material and specified sufficient reason. This is another important point. These expenses of the examination and records, including the remuneration, shall be determined and paid by the commissioner. So therefore, this point is important here. The commissioner takes the responsibility of paying the remuneration to the CA. It is his decision, and he has to pay for the remuneration, the expenses and examination, etc. All the commercials, they have to be paid by the officer, by the respective commissioner to the CA. And upon completion of the special audit, the communication goes to the registered person. What is the amount he has to pay, that is interest and other liabilities, and along with the audit findings, and registered person is called to discharge the liabilities. So the moment the registered person discharges the liability, no further action is taken. Otherwise, proceedings may be initiated under 73 or 74. 73 or 74, we will study the demands and recovery chapter. Basically, recovery of tax, which is required to be paid, comes under 73 or 74, which is in this the proceedings will be initiated. Now we come to the case studies. Before that, if you have any queries. Audit power revocation is applicable for, for 20, you're talking about GSTR 9C. 9C is not there since 21-22 also. Even 21-22 it was no longer applicable. 22-23 is anyways not applicable. Last year also it is no longer applicable. And so therefore now it is no longer there. It is only self-certification. Now what we will do, I request all of you to open your study material. I'll tell you the page number. We will go through the case study in detail there, and then we will look at what is exactly covered here. So these case studies, why it is covered? One moment. I hope all of you have your study materials. If anyone of you do not have the study materials, please let me know so that I will share my screen where the study material itself is given. So go to 21.54. So why these case studies are? This is where I felt very happy actually when these case studies were covered in the syllabus of the GST law. It gave me a very pleasant surprise because earlier it was not there. Always the students used to be presented a very rosy picture and say that it's so nice, so much technical things, it's all integrity, professionalism and all. All that is correct. But what exactly is happening practically, instances which are happening practically have been put out here in these case studies. So therefore, you need to be very, very important of the risks which are involved in case of certain things. That is what we were going to see now. So therefore, in this case, provisions pertaining to demands and recovery, officials, penalties or prosecutions are covered. Don't worry about the respective questions and answers for this, that you will anyways know once you cover the all the sections. But I'm expecting all of you to at least know the clauses where yesterday's discussion, that is 22 to 138, wherever it is covered there, those provisions you must be knowing because that yesterday only we have discussed. Apart from that, don't bother about 73 or 74 because that we have not covered. So as such, just only for the knowledge purposes, now you will go through the case studies. Eventually, I'm very sure that you'll have all the knowledge of all the provisions. Then you'll be able to answer. But I'm expecting all of you to know what are the penalties and offenses in this particular situation. Now let us go through the case study. Okay, I'll just... Is my screen visible? Can anyone tell me if you're able to look at the study material here? Okay. I hope all of you are able to look at my study material, the new screen, what I'm casting here. Yeah. So here, if you just look at the case, the facts of the case here is Messrs. L and Co, a partnership firm with two partners, Mr. X and Mr. Y, is registered under GST in Kolkata, West Bengal. So first thing what you have to remember, I would request all of you to note down whoever has a pen and pen. First thing is Messrs. L and Co here is a partnership firm. Okay, that you have to first note down. It's a partnership firm with two partners, Mr. X and Y. Okay, it is engaged in supplying the materials used for construction activity. X and Y are friends. Each of them also have their separate sole proprietorship firm. Okay, they have the separate sole pro. So two things you have to remember here. First, if there is a partnership firm where both of them are partners, And number two, they also have their individual sole proprietor firm. Fine. Engaged in supplying. These firms are registered under GST. Mr. A is the tax consultant of the firm L and Co. Okay. Please identify who all or who all. That is the only thing, main important point here. Now, what is happening? Let us see. Mr. X gets an offer from a customer, Messrs. W Private Limited, henceforth referred to as WPL, to issue some supply related bills to meet the budget allocated to WPL by the management in relation to civil works. When I say issue supplying bills, that means that company is asking Mr. X, you just give me bills. Okay, you just give me bills. You issue bills to me. You don't actually supply anything. You just give the bills to me. Okay, that is what he is asking. Mr. X will earn a commission of 20%. Now, what is happening? Now, this person will tell, you give me bills of 1 crore. What do you mean by Mr. X giving bills of 1 crore to the WPL? It means X is giving invoices of 1 crore to WPL. Okay, and WPL will show that as expense in his books. But technically, in fact, in the reality, there is no movement of goods. So therefore, it is a false invoice or it is a bogus invoice what he is requesting. For that, he is giving him a commission of 20%. See how they tempt. So 20% is the commission what is offers for that. X got tempted and X said to Y, because X and Y are doing this business and they are also involving the partnership firm in this. So therefore, X is telling it to Y and telling, see, this is what is the proposal. Whatever commission I earn, we will divide it amongst ourselves in 50-50. That is what he says. Okay. Now, what is happening? Now, L and Co needs a bank loan for expanding its operations. And what is happening here? Whatever supply bills are issued to WPL. Okay. 1 minute. Yeah. Now, L and Co is the partnership firm where X and Y are partners. No, they need a bank loan. So what they decided, instead of booking turnover from Mr. X to WPL, why don't we involve L and Co also here? So what is happening? This tax consultant has given the guidance. What guidance he has given? Totally fraud guidance he has given. What is the guidance? L and Co first. Please see what is happening. Very important. All these things practically it happens. Okay, and I'm very, very pleased that as students, all of you are you're reading this when you're studying, so that you know the kind of impact it creates on the Indian economy. So here, Messrs. L and Co shall issue supply related bills for steel, jellystone, cement, etc. for 280 lakhs to Mr. X, where delivery side shall be at WPL, build to ship model. In time of supply, you must have read this. So here what is happening? The invoice is raised by L and Co to Mr. X, but in the invoice it says delivery is to be done to WPL. That means there are two supplies here, fabricated supplies. One supply, this L and Co is giving to X, and then X is giving to WPL. I hope you got the point. Then what is happening? Mr. X shall avail and utilize the ITC on the bill of 280 lakhs. Now here what is happening? Now whatever this L and Co is there, the supply between L and Co and X, L and Co is showing the supply to X. So X is buying from L and Co for 280 lakhs. On that is availing the input tax credit, and separately is entering into agreement with the WPL for supplying of the products for construction of the machinery for 280 lakhs. Did you understand? So here what is happening? Two contracts are there. Mr. X is basically purchasing from L and Co. Why he is doing that? Because L and Co wants to inflate its turnover. See, because of this proposal given by WPL, this X and Y decided, this proposal is very good. Why don't we take advantage and inflate the turnover of L and Co? Because if I inflate the turnover of L and Co, I can tell to the bank and get a loan, because bank is concerned with the turnover what I am achieving. Bank is not going to go and check whether this fellow has actually sent the goods or not. They just want the immediate loans to be processed so that the respective manager gets the incentive and he gets promotion. So now what happens? This X is purchasing from L and Co and claiming input tax credit, and he is selling it to WPL. For how much he is selling? 280 lakhs he is selling. Apart from that, some labor work also issuing. Why issuing that labor work? The people will get doubt. Arey, I'm purchasing from 280 lakhs. I'm selling for 280 lakhs. What business I'm doing? There should be some expense benefit for me. That is why to cover up that, he's also issuing labor work bills for 40 lakhs for construction of machinery. Nothing has been happening. Only all everything on paper. Without providing any service, he is giving the invoice. Now what is happening? This WPL will avail and utilize the input tax credit on 280 lakhs and 40 lakhs used for underlying supply of the goods. So therefore, now since he is making the, see, he is purchased from LNCO. He is making the sale to LNCO. How much sale is making? 280 lakhs for the machinery and 40 lakhs for the labor work, the material, and 40 lakhs for the labor work. So therefore, this LNCO is paying that money to him and is claiming the input tax credit also. Here X what is doing? He is collecting that money from LNCO and is adjusting against the input tax credit what he has supposedly purchased from LNCO. I hope you understood the point. If you didn't understand, tell me and tell one again. Very, very interesting situation, but totally illegal. Then, for safety, what they have done, you see, all inventory registers they updated duly without any actual movement or supply. And also e-way bills also they generated. Without any transport of goods, they generated e-way bills also. Okay, they have generated e-way bills also here in this particular situation. So, can you see to what extent they are trying to cover their tracks? That is what is happening here. Someone asked me to zoom it. I'm just figuring out how to do it. Is it visible now? I don't know. One second. Let me just. I just zoomed it. Okay. So now, therefore, what is happening? Inventory registration they are updating. E-way bills also they are generating. Now, Mr. A is assuring for the kind of advice he is giving assurance also to them that inventory registers are up to date. Compliance is also everything is done. Whatever bills we have issued, money also will come. Be sure your commission is now yours. This is what is done. Now this X got doubt. This fellow is telling so many things. Let us go to my another friend CA and ask his help in the arrangement. Now, however, P, what he does, he's a practicing CA. He believes in integrity, confidentiality, and being true and fair in the dealings. So straight away he tells X as to what all are the GST implications in this. That is what we are going to discuss. Now let us look at the GST implications in this particular aspect. Let me go back to our slide. One moment. For some reason, I'm not able to. 1 minute. Yeah, I got it. Okay. So therefore, in summary, what is happening here? We have read the entire case study. In summary, what is happening? LNCO is a partnership firm. This is very clear. Two partners have X and Y. Both X and Y have their own proprietary firms also. Mr. A is a tax consultant. Customer WPL makes an offer for supplying the bills. Commission offered to 20%. 50% is agreed to share. Mr. A asks guidance on the transaction. Okay, so what does Mr. A say? First, LNCO, just summarizing what we discussed so that it is clear for you. LNCO issues the invoices for 280 lakhs to Mr. X. Bill to ship transaction, deliveries to be made to WP. Mr. X will avail the input tax credit. He will enter into contract for further supply of 280 lakhs. And also 40 lakhs labor services bill also is given. So here what is happening? WPL will avail ITC on GST paid. Okay. How it will avail? This Mr. X is charging them 320 lakhs on the GST paid. Mr. WPL will avail the ITC. There is actually no supply of goods or services also, and is covered his tracks by updating all the inventory registers, and the bill generation also is done. So what are the implications here? First one, issue of invoice by Mr. L and company to Mr. X. Now what is happening here? There is no supply of goods and you are issuing an invoice. So therefore, the penal action will be taken both under 122 and 132. Why under 122? Because he is contravening the provisions of the act here. He is issuing the invoice without the actual supply of goods. And why action under 132? Because the value is more than rupees 2 crores. So therefore, 101, 132 also will kick in here. 132 also will kick in here. So therefore, in this particular situation, you cannot proceed under 74 because there is no supply of services. If a person is genuinely supply goods and he has not paid the tax, then demands and recovery section 74 of the CGST will be applicable. But here he has not done that. He has not even made a supply. He has just produced the fake bills. So straight away 122 subsection 1 clause 2 penal action for issuing the tax invoices without the supply of goods. This will be triggered on LNCO. This is the implication for Messrs. LNCO. First implication. Then the second implication is issue of invoice by Mr. X to WPL. Here also there is no supply of material. Mr. X has issued the invoice without supply of material. There is no requirement of any tax because there is no supply only. But penal action will be undertaken again under 122 and 127 for issuing invoice without supply. Okay, and availing the credit without actual receipt of goods or services will be applicable. WPL will be liable to recovery. WPL claimed ITC. So therefore, apart from the penal provisions, also wrongful claim of ITC and recovery will be initiated under 74. That will be covered for WPL in this particular situation because WPL has claimed the input tax credit. And what are the GST implications on Mr. A? The penalty. Mr. A also will not be let along. 122 subsection 3, aiding or abetting the offense committed will get triggered, and on Mr. A also penalty will come. So also another important point. Now what happens? Are these 3-4 persons only involved in the penalty? Please bear in mind that chartered accountant is there. If he says, okay, I will accept the assignment, I will also support you for supporting that. Even the chartered accountant will come penalty under 122 subsection 3. So therefore, straight away, this point has to be refused by Mr. P, who is the practicing CA here, saying that this is totally illegal. I don't want to be part of this particular arrangement. This is the best response which can be given to make sure that we are on the right side of the law. I hope this case study was clear to everyone. I hope what is happening, what has happened in the case study is clear to everyone. If you have any queries, please let me know so that I can look at it further. So why all these things are being done? Just for pure greed and for the purpose of their own benefits. Now, why is this WPL asking bills from Mr. X? Because it wants to boost its expenses. It wants to boost its expenses. That is why it's asking for the bill. Now, why is Mr. X involving LNCO here? Because LNCO wants to go for a bank loan. LNCO can go for a bank loan only if the turnover is high. So therefore, book fake turnover from LNCO firm to this Mr. X. So thereby the objective of LNCO also is achieved by inflating the turnover. And this X also he is selling again to WPL, wherein again WPL also has the benefit of expenditure creation and therefore saving of income tax. So therefore all these are a fake and illegal arrangement which is done just because of Mr. A, who has advised them wrongly, who is telling them, you please do this. I have updated all the registers, etc. Don't worry, nothing will happen to you. But because of that, they are at risk. Because of that, they are at risk. That is why it is ideal. So the best point from Mr. P, who is the CA, advises there will be a punishment for penalty also. Therefore, he may also be held guilty for professional misconduct from under the Chartered Accountants Act 1949. That also will be triggered. Fine. I hope all of you are clear with case study number 1. So since each case study takes quite some amount of time, I don't want to start one and again break in the middle of it. Let's have a short break of 10 minutes and we'll meet soon for discussing the balance 3 case studies under the ethics chapter. So see you in 10 minutes. Welcome back, everyone. So now let us come to the second case study here in this respective study material. I would request all of you to open your study material as well. One moment, I'll just shift to the study material now. Yeah. So let's go through what is mentioned and then we'll again discuss each of the implication. Now, this is a case where the refunds are covered. Okay. The refunds are covered. So therefore, if you remember, we had mentioned, I'd also give you a brief hint that it will be discussed in the case study when we spoke about the certification given by a CA when it comes to application for refunds. So what is happening here? Doodle LLC is an entity registered in Germany and is engaged in providing online services across multiple countries, including India. So there is an entity which is located outside country in Germany, and it is providing services across all the countries, including India as well. And the service offerings include certain services which are covered with the purview of OIDAR services. Now, what is OIDAR services? It's specifically mentioned. This would have been covered in your place of supply chapter and also the concept of supply chapter, wherein online information database access and retrieval services. Now, since the world has evolved and lot of services are being provided just through the cloud and just through the computer systems. So therefore, these particular services assume a lot of importance, and the GST for these also, the GST department. This particular situation, in case the foreign company does not have any place of business in India, it can appoint some of the employee or any other person as an authorized person for the purpose of registering under GST and for doing the necessary compliance of the GST, that is filing of monthly returns and paying the GST to the government and all of those things. So here what is happening here is since Doodle LLC does not have any place of business in India, it appoints one of its employee, Mr. X, as its authorized representative for all purposes in India. It includes undertaking GST compliances and also an authorized signatory for other regulatory compliances like opening a bank account, signing any document, all these things. Mr. X is the authorized person. Mr. X is also a partner in XYZ Associates LLP. He's also a partner in another firm. Now, post appointment of Mr. X, following chain of events unfolded. Now, what happened here? First, Mr. X, since he is an authorized representative of Doodle LLC, he made an application for registration as OIDR service provider, that is fine, and undertook other GST compliance, that also is okay. Subsequently, Mr. X started filing monthly GST returns and also made payment of monthly GST on behalf of Doodle LLC. In lieu of such services, Mr. X was being remunerated a fixed sum on a monthly basis as professional fee. Now, just because he is doing this service, Doodle LLC paid the money to Mr. X on a monthly basis as professional fee. Appointment of Mr. X, please note this point very carefully. The appointment of Mr. X was in personal capacity and not a professional service contract with his partnership firm. Doodle LLC has appointed Mr. X in his personal capacity to do all this work. It has not appointed the partnership firm XYZ. However, for recovery of fixed monthly remuneration, the invoices as export of services were issued by X in the name of the partnership. So now what has happened here is this partnership firm XYZ and Associates LLP has a lot of input tax credit. It has its regular business receipts. Now, refund can be claimed with respect to zero rated supply of goods or services. This all of us know. So what Mr. X has done here, because if he provides the services directly to Doodle LLC, because on his personal capacity is doing, so therefore he needs to he'll get money from outside the country. The story is over there. Okay, but here what he has done, since he is not getting any input tax credit, so what he thought of a plan. So what he did was he told his partnership firm where he is a partner, saying that I'm going to get some money from Doodle Link Doodle Associates or Inc. LLP, Doodle LLC, I'm going to get the money from him. But you send the invoice from XYZ and Associates LLP to Doodle LLC. Okay, that is what he's telling. This will enable us to claim the input tax credit, and I will show whatever money has coming from Doodle LLC to XYZ here will be an export of service. So therefore, for recovery of monthly amount, invoice as export of services were issued in the name of the partnership firm. A corresponding refund benefit was claimed by the partnership firm of Mr. X, that is nothing but XYZ Associates LLP, for input tax under export of service invoices. This is the first mistake what has happened. So what is the implication here that we will see shortly. Second, what has happened, you see. Now, Doodle LLC appointed influencers. Can anyone tell me what are influencers? These days, this word influencer is becoming very. Can anyone tell me what do you mean by the term influencer in today's terminology? If person is punishable under 132, then there can be penalty under 73. 73, 74 will kick in when he is supposed to pay the tax, but he has not paid, because it pertains to demands and recovery. Okay, penalty and punishment under 132 and 73, 74 penalty are totally different from each other. 132 will come in cases of offences. If he has done any mistake, apart from your regular recovery of tax, he will have this prosecution, compounding, all those things will keep coming. So therefore, both are separate from each other. So in the example what we have discussed, why 73 or 74 will not come? Because there is no question of supply only. The supply itself did not happen. The main issue pertains to issuance of bogus invoices. So issue of invoices without supply means that means he is not required to pay any tax. But that does not mean he is not committed an offense. He has committed an offense for falsification of documents and issuing an invoice without supply of goods or services. So he will be proceeded under 122 and 132 and not under 73 or 74. I hope you got my got the point on that. Coming back to our discussion. So here, so what is an influencer? Can anyone tell me? I stopped there. Influencer. Influencer these days basically refers to any famous person or celebrity or actor or a well-renowned person who promotes the brands on social media, and gives them benefit because they usually have a lot of followers. Now, what is happening? Doodle LLC appointed influencers in India to promote the services in India. Okay. The tax invoices of such influencers were received by Mr. X in name of XYZ Associates LLC, and the ITC was availed by the partnership firm for such services. Can you see what has happened here? Can you see what has happened here? Doodle LLC appointed the influencers. But what Mr. X has done, because Mr. X is the main person who is coordinating everything. So for what Mr. X has done, see, Doodle LLC is not concerned. Technically, it has to be concerned, but since he is the main person, what strategy he has used here is, you send invoices from the firm's name, stating that amount needs to be paid towards influencers. Stating that amount needs to be paid towards the influencer. You issued the invoice from the firm's name. So XYZ Associates again issued the invoice here. Okay. Whichever influencer invoices are there, all that XYZ Associates and whatever payment is being made, okay, input tax credit was availed by the partnership firm for such services. So here what is happening, that the invoices what the influencers were given, they were not given to Doodle LLC. They were given to XYZ and Associates LLP. Did you understand? Doodle appointed influencers. What the influencers did, this Mr. X told the influencer, you raise the invoice not on Doodle LLC. Because if they raise the invoice on Doodle LLC, they will not get anything. There is no GST benefit or etc. here. So what he is doing? So you don't raise the invoice on Doodle LLC. You raise the invoice on XYZ and Associates LLP. So XYZ and Associates is making payment to the influencers, and whatever GST the influencers are charging, XYZ and Associates LLP is claiming the input tax. Do you understand the point? So therefore, that ITC was also used for the supply of services by XYZ Associates and LLP. However, in this case, the actual service recipient is Doodle LLC. So another offense has been done here. What has been done? The person to whom the services are provided, okay, that itself has changed here. The invoice is been asked to give on XYZ Associates LLP, whereas the appointment is done by Doodle LLC. I hope you got the point. Then, next one. Subsequently, Doodle LLC was required to submit certain affidavits and according records before the office of the Enforcement Directorate. So, Enforcement Directorate is another authority altogether, which basically talks about, which basically looks at the cases where foreign currency related transactions are involved. So whenever any foreign currency keeps coming within the country and the rules are not followed, the Enforcement Directorate is well within its power to issue a notice with regard to that and ask for further information. So here that only has happened. So what has happened here, since Doodle was required to submit the affidavits, being authorized representative or signatory of Doodle LLC, Mr. X approached the chartered accountant Mr. P to prepare the affidavits and according records, which includes critical financial information and data of Doodle LLC. He elaborated the entire arrangement between Doodle, Mr. X, XYZ to Mr. P. He requested Mr. P to certify and attest that records which will be prepared and compiled by P in capacity of a practicing chartered accountant for submission before the Enforcement Director. What are the implications here? What are the GST implications here? Can anyone in brief tell me what are the implications here? Who do you think is the person who has committed an offense in this entire case study? Who all can be proceeded against under the GST law? Under the GST law, who all can be proceeded against? Who all can be proceeded against as per you in this particular case study? Coming back, what is the first thing what has happened? There is an incorrect issuance of invoice for export of services and claim of refund of input tax credit on the basis of such invoice. Why there is an incorrect issuance of invoice? Here, first of all, the issue of invoice by XYZ and Associates LLP itself is wrong. Here, Mr. X has been appointed in personal capacity for providing the services to Doodle LLC. Therefore, he only has to issue the invoice to Doodle LLC. Just because this XYZ Associates can claim the input tax credit, XYZ Associates is raising an invoice on Doodle LLC because he's showing it as an export of service. Why? Doodle LLC is located outside the country, so it is being portrayed as XYZ Associates LLP rendered a service to Doodle LLC, which is an export service and is claiming the respective input tax credit as a refund. So that is the first point. So therefore, here what is happening? On personal capacity, authorized representative was there. Consideration was received at the behest of invoices on the firm. Further, such invoices were issued as export of service. Corresponding refund also was claimed. So therefore, this act of Mr. X along with his firm, both are punishable. So therefore, here what is happening? First thing, X provided service. X also will be punished. Why will X be punished? Because X has provided the service to Doodle LLC without any invoice. X has provided the service to Doodle LLC without any invoice. He will also be liable for demand and recovery along with penal action under 74. Why? Technically, X is providing service to Doodle LLC. Therefore, X should have raised the invoice. Okay, X should have raised the invoice, but he did not raise the invoice. But he's providing a service, supply of goods or services without tax. So therefore, tax also will be applicable. Why? Because the supply has happened. X has supplied the goods services to Doodle LLC. Therefore, the supply has already occurred. Therefore, 74 also will be triggered and tax also will be recovered. Okay. X cannot say that the invoice has been raised by XYZ and associates. That is not at all acceptable in the current situation because both are two different persons. So therefore, in this particular situation, this recovery of tax will come. Also, the invoice issued by the firm is an issuance of invoice without the supply of service. Therefore, 122 subsection 1 clause 2 also will come. Fine. And also, incorrect refund application also has been taken. 122.1.8 speaks about erroneous refund. Here you have claimed erroneous refund of the input tax credit. You are showcasing yourself as an exporter who have not done the service at all. So therefore, that also is an offense here. Imprisonment and fine also will come under 132 subsection 1. So this is the first implication on both Mr. X as well as XYZ associates and LLP. Then the second offense what has been done here is availment of ITC without actual receipt of services. Here what is happening? The influencers are raising invoice on XYZ Associates LLP. XYZ Associates LLP is paying the GST to the influencers and is claiming the respective input tax credit. Whatever input tax credit they have claimed again is in contravention of the provisions. Why it is in contravention? You have the influencers have not provided services to XYZ associates. The influencers have provided the services to Doodle LLC directly. Therefore, you cannot raise the invoice. You cannot raise the respective invoice here. That is why here there is a contravention done by XYZ associates and LLP. Whatever input tax availed is whatever is not correct. Therefore, demand and recovery of ITC under 74 also will come because you have claimed ITC wrongly. You are claimed ITC wrongly. Therefore, this also will be recovered. And apart from that, the offense is also punishable with imprisonment and fine because it speaks about the input tax credit which has been erroneously claimed. I hope this is clear. Now, on Mr. X also, wrongdoings are there. Authorized representative signatory is also applicable for penalty 122(1)(a) and 123 because at his instance, the offense has been committed. So therefore, 122(1)(a) will be triggered and also 122 subsection 3, that is aiding or abetting. Both will be triggered in this particular situation. These offenses may also be punishable with imprisonment. Again, if a CA takes up this assignment and also certifies, this is the fourth implication, in case Mr. P takes the assignment and for submission of enforcement directorate, if he decides to certify those accounting records, that also he'll be guilty for professional misconduct. He'll also be guilty for professional misconduct. So therefore, these are the various implications in this particular case study. So these case studies are for you to understand as to in what ways the GST laws are being misused and the risks what it poses to the persons involved as well as the professional who is certifying or is giving his advisory services with regard to such arrangements. Fine. So is case study 2 clear? Is case study 2 clear? Anyone? Any queries here? Can we proceed to the next case study? Can we proceed to the next case study? If any doubts, please let me know. Else, we'll proceed to the next case study 3. Here, what is happening? This is a case which talks about a special audit under section 66. We read through a special audit now, wherein the CA can be appointed by the respective government for the purpose of assisting in the special audit which is being conducted on the taxpayer. So here the appointment of a CA is totally done by the GST department, and also the remuneration and other expenses also is compensated by the department here. So this case study pertains to that. What is happening here? Let us see. Summarize case study 2. Namrata, do you want me to summarize the case study 2? 1 minute. I'll go to my slide then, because my slide has a brief summary, but since a lot of critical information is there, I'm referring to the study material separately. I'll just share my PPT as well. Yeah. So therefore, if you see here, the three offenses, I hope this is clear for everyone. First is incorrect issuance of export of services, claim of refund of input tax credit. This is what is happening. And then second, availment of ITC without actual receipt of services. Here what is happening? Service was provided, but invoice was not issued. So therefore, in this, invoice was issued to the wrong person, and he has claimed the input tax credit. That is the second implication. Third implication on Mr. X, because he has done a wrong. So he will also look at this. Now we come to case study 3. I hope case study 2 is clear. You can go through it once. So here mainly the type of offenses which are being done by everyone is important here. That has to be understood by everyone. Now we come to case study 3. We'll look at it here only because it's covered here as well. Please keep your study material aside for reference as well. So ABC and Associates, a firm of CS, was empaneled with Commissioner of GST for appointment as a special auditor under Section 66. Very clear. X Limited, a registered person under GST, was selected by the Office of the Commissioner for Special Audit under 66 for financial year on account of irregularities noticed during scrutiny of returns. Now, he has seen the multiple returns which have been filed by X Limited. He has noticed a lot of mistakes and wrongdoings. So, therefore, he decided to select this particular company for a special audit under Section 66. Okay. ABC was nominated by the Office of Commissioner for the special audit of X Limited. Being a CFO, it was nominated for the special audit of X Limited. Now, here what is happening? Whenever a special auditor is appointed, he has to give an undertaking that the partners of the firm or any of their relatives are not directly or indirectly related to the auditee. Auditee means the person on whom the audit is taken place. That is X Limited in this case. So who are the chief functionaries of X Limited? It will be your directors of the company and the person involved in the affairs of the company. So therefore, if any firm is is doing a special audit, it has to give an undertaking to the department saying that their relatives are not directly or indirectly related to the audit. But in this particular situation, when submitting the declaration, if ABC fails to disclose the fact that a spouse of one of the partners of ABC is working under full-time employment as a head of tax department of audit, that is X Limited, what will be its implications? Okay. Can anyone tell me what will be the implications? So here what is happening? ABC partnership firm has one other partner apart from this. One second. What was his name? Yeah. So in this case, what is happening? One of the partners, there's no here, ABC firm only. One of the partner's wife is working as a head of tax department in X Limited's office. So what will be the implications? Can anyone answer? What will be the implications? I'll just wait for a few minutes for anyone to answer. Then we'll look at the implications in detail. See, case studies as such is for you to understand the rules and understand the penalties. Okay, so therefore, in case studies here will not be asked as a big question in the exam. Like this huge case study as such will be given and a lot of things that won't be asked. See, case studies is basically to understand the concepts. Parts of the case study can be asked as questions. So when I look at 3 to 4 GST implications here, one implication may be asked in the examination. So that is what is there in case study 3. Case study 3, if you see here, he is asking what is the implication. So this can be a question here. So you will not have all of these points here mentioning like so and so happened and all of that. What will come here is, I'll tell you how the questions will be asked. Here, you will just have a question saying that ABC was a special auditor. In that case, he has undertaken, not related. What are the implications? This may be the question what we are asked. Why we are covering the case study? So understand the criticality of the offences. To understand the criticality of the offences and who all will be the necessary persons who will be penalized in case the offences take place. I hope it is clear, Viraj. Officer of commissioner will cancel the appointment. Okay. Integrity impaired. Okay. Okay. Fine. So basically what happened? It tantamounts to false declaration by the CA to the GST authorities. So therefore here what is happening? Here, in case you are not declaring the correct particular point, what exactly is going to happen? It is a false undertaking which is submitted before the commissioner and the audit engagement is undertaken on the basis of such undertaking. So what are the terms of special audit? That the relatives of the partners of the firm should not be directly or indirectly linked to the year. But in this case, she is a head of tax department. It is one of the critical roles. So therefore, if the CA firm, her husband is a part of a CA firm and he does the special audit, that means it's a total conflict of interest. So therefore, in this particular situation, it is a false declaration by a CA firm to the government authorities. The question may be raised on the independence of the firm because the spouse is working in the respective tax department. Also, when whatever happens, the outcome of the audit, in case the commissioner notices it later, he can definitely cancel the appointment and order a re-audit to be done. Particular provision as such for this is not mentioned in the penalties. However, general penalty residual provision can be invoked, wherein it says that wherever the penalty is not clearly specified, because as such there is no offense or such here. He has failed to do an undertaking. So this is not specifically mentioned in any other offenses, but it will definitely be a general penalty can be levied as a residue where the penalty has been committed, where the offense has been committed, but such an offense has not been mentioned anywhere. So in that particular point, he may be put a general penalty up to 25,000. Of course, from the CA Act, the professional ethics rules, code of ethics, clear violation is there. Disciplinary action will be definitely taken by the Institute of Chartered Accountants of India. Now the second point, material discrepancies in valuation of stock transfer to related parties by the auditee were noticed by ABC. So the CA firm is doing the audit. Okay. So undertaking that implication will be there, but he's doing the audit. So in the course of the audit, valuation, value of supply, you must have seen section 15, value of supply. In case of related party, how you have to value? Open market value, say like kind of goods, same kind of quality, multiple rules are there in the valuation rules. So here what is happening? To related party, there was stock transfer. In there you can see the material discrepancies. If this ABC firm fails to disclose the material discrepancies in the audit report submitted to the commissioner, what will be its implications? Also, the input tax credit claim by X Limited under ITC 01. ITC 01 will come when we just saw in the section 18, wherein from the composition to regular scheme he has shifted. Here he is certified by the associate firms of ABC in favor of X Limited. So whatever input tax credit which is claimed was certified by associate firm. That is, associate firm is basically a sister concern of ABC Chartered Accountancy firm in favor of X Limited. Such certificate was based on incorrect facts and against the eligibility criteria for input tax credit as per Section 80. However, if ABC fails to exercise the due diligence and certificate is taken on record by ABC as an audit procedure, if ABC blindly takes the certificate, saying that okay, certificate is given by a CA and it is all everything is fulfilled and is relied upon at the time of finalization of the audit report and submission of findings, what will be its implications? So kindly try to let me know your views on this. So two things are happening here. First thing, stock transfer to related party transactions are happening. He has found some discrepancies there. Maybe in the valuation rules, value of supply rules are not being followed or something. Some discrepancies are being found out there. So what will be the implications for that? Number two, he has claimed the input tax credit which has been certified by the associate firms. There also he is not raising any questions. He is straight away taking that as a record and is finalizing the report and submitting his findings. So what do you think will be the implications in this case? Any views? Any views for the implications for this? So I'll wait for your responses. So here what is happening? Let us come back. First thing is the non-reporting of material discrepancies noticed during the audit procedure and reliance on incorrect certificates and information. So two wrongdoings have been done here by the CA firm which has been appointed. First thing is you have noticed a material discrepancy or a material deviation with regard to the stock transfer to related parties. And the second one is you're relying on incorrect certificates and information. You're relying on incorrect certificate and information. First thing is the APC audit team did not exercise due diligence. Definitely. To ascertain that ITC is not in compliance with the GST provisions, straight away they relied on the certificate issued by its own associate firm which justified the incorrect input tax claim. So therefore, in this particular situation, both ABC and the associate firm which issued the certificate to justify the input tax credit were aiding and abetting because they know that this claim is incorrect. They have given the certificate. So therefore, associate firm also has aided and abetted the offense in this particular situation when it comes to wrongful availment of credit. So apart from this, even ABC also is not bringing this information to light in front of the GST authorities. He has finalized the audit and completed the findings and submitted his report and thereby ignoring this important point. So since this is being ignored, then in both the cases, what is happening is in both the cases, they will be levied penalty under 122 subsection 3. Also, imprisonment also will come. Falsified records. Falsified records offense will be punishable with imprisonment 132 1 depending on the amount of default. Can you look at the can you imagine being after you have spent so many hours toiling and efforts in passing your exam, you do some small mistake like this and you're in jail. Can you imagine the kind of impact it will have on the personal mindset of the CA? So that is why these case studies are there to understand what kind of penalties are given here. So therefore, here both ABC apart from these offences and penalties, also for ABC and associate firm will be held guilty for professional misconduct. Now, the third offence which has taken here, consideration of 5 lakhs from X Limited is received. We saw very clearly when we saw section 66 today. If you want, let us go back to section 66, what we covered today itself in the part of the reports which he has to submit. Let me see if I can, this one. If you see here, the expenses, I put it in bold, that's why, because we'll be referring it to again. The expenses of the examination and audit of records, including remuneration of the CA, shall be determined and paid by the commissioner, and such determination will be final. So, who is paying the remuneration here? Remuneration is not being paid by the auditee, it is paid by the commissioner. But in the case study, what has happened here? He has taken the amount of 5 lakhs consideration from X Limited. That itself is a wrong thing. That means there is a huge conflict of interest. This person is doing a special audit where the department has identified him, asked him to assist in the special audit, to do some findings for them and give them a report. But this person, what he has done, he has taken the money from the auditee himself. So there is a conflict of interest. So he has taken money of consideration of 5 lakhs, means obviously he will say that this person has complied with all the GST laws and regulations. So therefore, in this case, consideration is payable by the commissioner, cannot directly be recovered from the auditee. Present case, it is an offence. Same is liable for general penalty. Again, why general penalty? It is not mentioned anywhere. That is why general penalty will be there in this particular situation. Also, that will have an impact on the independence of the auditor. Professional code of ethics, 100% it is covered under code of ethics. Professional misconduct, CA Institute also will issue a disciplinary notice. Auditor appointed by GST department for special audit due to scrutiny can also be a malified. Malified, I didn't understand that. Is there a typo? Can be a malified. Penalized, did you mean penalized? Modified or malified? Just check that. If it's modified, once you appoint it, and after the report comes, if there is any issues with that, then you can appoint another audit for doing it. Just check that question and accordingly you can. Thank you, Viraj. Hope things are clear for you. And also case study 3, I hope is clear for everyone before we go to the last case study under this particular chapter. Any further queries on case study 3? Please let me know so that I can clear them. I hope all of you have seen the kind of penalties which are levied for the offences which are committed. Now we come to case study 4. Case study 4 is very, very interesting. See what all one person is doing just so that he can save some money and make some money. A Limited is engaged in business of manufacturing cotton yarn, wherein cotton is the principal raw material in the manufacturing process. So he is in the business of manufacturing yarn, wherein it is the principal raw material. Price of cotton varies depending upon the market conditions and is also dependent on various external factors. Mr. X is also a tax consultant of A Limited. Mr. X advises A Limited on GST compliances. Okay, this is what is happening. Now, what is happening here? In order to meet the expansion related expenditure, A Limited went for a term loan and working capital loan from the banks. As per the bank, the turnover and profit were not meeting the benchmarks for the sanction of loan. Therefore, this X is the tax consultant. See what a beautiful advice he has given. Separate entity B Limited was incorporated and the directors of A Limited were appointed as directors of B Limited. This is ensuring what? The control of B Limited totally remains with directors of A Limited. Did you understand? So what he did, okay, we are not getting loan. So what shall we do? Mr. X started thinking in his mind how to develop a strategy for this. He said, we'll form a separate company. Whoever are the directors of A, they can be the directors of B Limited. Therefore, common directors are there. So therefore, B Limited means I am only the owners of A Limited are only owning B Limited also. Not only that, this B Limited also applied for GST registration as a manufacturer of yarn, wherein Mr. X assisted B Limited in obtaining GST registration. He obtained registration by providing fake documents for registration. So whatever company KYC and all are there, he's put at manufacturer of yarn. All fake information he gave, maybe some fake address also he has given. So therefore, he obtained the registration also. Subsequently, A Limited started issuing tax invoices for supply of yarn to B Limited. However, there was no actual movement of goods to A Limited to bill. Now, what is happening? You see, their turnover is not there, profitability is not there. A Limited is not getting loan. So now, what this X told? You start issuing invoices for supply of yarn to B Limited. That is your own company. But how will GST person know? There I am just submitting the total value of supply and showing the huge turnover in the books of accounts. So you do that, but there is no actual movement of goods. So straight away, issuance of invoice without supply of goods is triggering here. That is what is happening here. Next, the tax invoice were issued. Same was reported in the GST returns by A Limited. Further, B Limited took the input tax credit of all such tax invoices reported by A Limited. What is happening here? See, A is selling to B. A is raising tax invoices to B. B is claiming the input tax credit because B has paid that amount to A. B has paid that amount to A. And in that particular situation, that B is paid that amount, no. So he has to claim the input tax credit. So he is claiming the input tax credit to B. So tax invoices were issued. Same was shown in by A Limited. Further, B availed the input tax credit of all such tax invoices. The finished goods relating to such tax invoices were sold in the local market by A Limited in cash without charging GST, without issuance of the tax invoice. This is what has happened. He made it as if he is selling it to B. But in reality, what he has done, he has sold it in cash. Slowly, inventory books also became zero by everything he has sold in cash. Where that cash went, obviously it is with A Limited. Without charging GST is sold, without issuance of tax invoice he has done. Then, not only that, now what is happening? Now, we have seen here, A Limited issued for supply of yarn to B. Now, B Limited is issuing tax invoice for provision of certain services to A Limited in the form of testing of cotton, repairs, maintenance of machinery installed at A Limited apart from other services. However, no such services are. Why he is doing this, we'll know now. A has supplied this yarn to B. B is claiming input tax credit. Now B needs to adjust that input tax credit somewhere. Am I right? B needs to adjust that input tax credit somewhere. That is why what did B do? B issued tax invoices for provision of services to A in form of testing of cotton, repairs, maintenance, etc. In reality, nothing happened. No services were provided. In reality, there are no services which have been actually provided. Therefore, the input tax credit appearing in books of B was utilized by B at the time of discharging the GST liability in relation to the alleged tax invoices issued against the provision of services to B. I hope you understand this. So whatever ITC is there for the provision of the input credit appearing in the books of B. What input tax credit is appearing in the books of B? The purchase of cotton yarn he has done from A, that is there in B. That was utilized for discharging the tax liability for these services which were actually not provided. These services it raised invoices against that GST. He utilized the input tax credit. Another thing, what he did B issued tax invoices for sale of yarn to other group entities to ensure the stock of yarn becomes zero. Because now he has purchased from A, that means he has stock with him. Oh, where is the stock? Someone will ask. So what he did? He issued invoices for sale of yarn. See the interesting thing what he did. He issued the tax invoices at a low rate lowered by 90%, saying that quality got deteriorated. Not only are this the yarn not there, this B Limited, he made that quality of the yarn also bad. So he made sure that there is no yarn. First of all, actually there is no yarn, but he created an impression that there is yarn. I am providing services, and this yarn, whatever I have, I am again selling it at 90%. What to do? Full loss is devoid. He is showing a sympathetic feeling in front of the GST department. Did you see what he's doing? He is reduced by 90% and is selling, and the quality has deteriorated during the storage. Mr. X was aware of the aforesaid actions of A Limited and B Limited. All the GST returns also neatly this Mr. X has filed. What has to be put there? What input tax credit has to be claimed where? Everything this person has done. What are the implications? What are the implications? Multiple implications are there here. What are the implications? Can anyone tell me? Malified can be a malified. Definitely, definitely. He's also, see, if the special auditor, so you see, if the government appoints a special auditor, coincidentally it arises that the special auditor knows that person, and his partner's wife or someone is there. It's a coincidence, but he has to disclose that fact. He has to disclose that fact to the tax officer so that his appointment is not invalidated, and some other person can be appointed on his behalf. But he has not done that. That is what the mistake what has happened here. Okay, so multiple offenses are happening here. Let us see what all are the offenses here. Meanwhile, you also can post your views. It's there in the study material in case in the slide it is not there. So here what is happening? First one, B Limited GST registration was done on the basis of fake documents. Fake documents were submitted and the GST registration of B Limited was obtained. So therefore, false information with regard to registration particulars 122(1) subsection subclause 12 is an offense. Therefore, B Limited is liable to penalty under 122(1)(12). Second, what is happening? Issue of tax invoice without actual supply of goods or services. Fake issuance of tax invoice for a supply of yarn by A Limited to B Limited. Just because this A Limited wanted to boost his turnover, he issued a tax invoice for supply of yarn by A Limited to B Limited just to inflate the turnover without the actual supply. Then there was also a fake issuance of tax invoice for supply of services by B to A Limited. This B Limited, because what has B done here? Now B has supposedly purchased the yarn from A Limited. So therefore, he has a lot of input tax credit. Again, something he has to adjust. So what he decided? He decided to fictitiously or fake invoice for supply of services by B to A Limited. Not only that, he is also supplied fake invoices for the goods which are he is purposefully showing as deteriorated by 90% of the value. He is selling the proper goods only at 10% of the value to the group entities, which is also a fake invoice. So all these actions are liable for penal action under 122(1)(2) for issuing tax invoices without the actual supply of goods and services, also punishable with imprisonment and fine under 132(1), depending on the amount of default involved and subject to certain specified conditions. Did you understand? I hope this is clear. Very, very interesting case study 4, where a lot of things has been done here. Bogus invoices to get ITC. Yes, you're right, Manisha. That is the main thing what is done here. Fraudulent ITC availment. Not only that, what he has done, not only has he issued fake invoices without the supply of goods or services. Okay, not only he has put fake documents and obtained the registration. Main thing what he has done is fraudulent ITC availment. Fraudulent ITC availment. Why? Because you have supposedly purchased the goods from A Limited and you availed the input tax credit. Therefore, you have violated the conditions of section 16 of the CGST Act 2017, which talks about the conditions for claiming the input tax credit, of which one essential condition is without receiving the goods, you cannot claim the input tax credit. So in this case, you didn't receive the goods at all. Without receiving the goods itself, you have gone ahead and claimed the fraudulent input tax credit. So therefore, penal action will come under both 122(1)(2) and 122(1)(7) for issuing invoices without any actual supply of goods, for taking input without actual receipt of goods or service. Also, this offense will be punishable with fine, with imprisonment under 132(1), depending on the amount of default and subject to conditions. Furnishing of false information also is an offense liable to penalty. Therefore, B is liable to penalty with regard to this. Not only fraudulent availment of ITC, issuance of invoice without supply of goods or services, getting the registration by submitting fake documents, you are doing return filing. Who is doing this? X Limited aiding or abetting. He is doing the return filing, incorrect information. You are falsifying the books of accounts. You are putting all the sales and purchases which never happened in practicality. You are falsifying the books of accounts. You are also putting incorrect information in the GST returns. So therefore, the GST returns, whatever were filed by A Limited and B Limited, are not backed by correct information in respect of the supply of goods and services. Therefore, since there is no supply of goods or services and ITC is not available, the returns were filed by both the companies. Again, books and records are also falsified with information relating to sales and purchases which never happened. So whatever this act of filing the incorrect information in the GST and also the falsifying the financial records is an offense under 122(1)(10). This offense is punishable with imprisonment and fine. If you remember, there is no monetary limit also with regard to falsification and incorrect information. So 132(1) information imprisonment also may occur. GST implications on Mr. X, definitely liable to penalty. He is the main person, he is the architect, he is the brain behind this scam. So therefore, he is the main person who is to be put here, punishable with imprisonment and fine. One more thing, just because these case studies are there, I hope, I'm 100% sure there are no such persons, but this should not be giving ideas to you. Rather, these are all given so that for you to make sure that you don't indulge in certain things, period. You don't indulge in certain things. If you are a CA, you should not indulge in certain things. I agree there are a lot of news coming along, like a lot of arrests are being made, CA is found with a lot of money in his house. All these things are keep coming. They are all very insulting and demeaning to the profession, because our profession has been it has been a main picture of integrity for so many years. For so many years, it's a picture of integrity. So many eminent chartered accountants in the country have made a name for themselves in dissemination of education and being part of the Central Council as well as other various multiple leadership roles. We have politicians who are chartered accountants in our country. So therefore, the name of the profession is very important. So this should be always in our mind when we especially decide to practice, and also if you decide to work in any taxation wing as such, because since we're talking about GST here, you will encounter GST post qualification in two ways. Number one, if you are in a consultancy firm which practices GST, that is one aspect. And the second aspect you will also encounter when you become a CFO of any company, wherein there only you'll be responsible for all the GST compliances. So if you are in the profession, you will get multiple, because many people are there who offer such schemes wherein the money is there, which usually it is used for tempting and luring people to do such offenses. But humble suggestion is, please never even think about it, because all of you should remember, ultimately we are CAs at the end of the day. I'm sure all of you will qualify at the end of the day, we are CAs. So that has to be preserved no matter what, because we as CAs have a standing in the society. We need to behave in a particular manner. We are professionals. In general also, we need to behave in a professional and proper manner, not necessarily when you're acting as a CA. Fine. So therefore, in this particular situation, imprisonment will be there. So with this, we come to the end of this chapter, offenses, penalties, and ethical aspects. I hope all the 4 case studies were clear. And if you have any queries, again, as usual, please feel free to always post. Let me see. Transparency is compromised at every stage. Correct. Because this is right from each particular transaction is bogus. Each particular transaction has been done just in order to make some quick money. Fine. So let us go back to the material ones. Yeah. So these questions, test questions, you can just go through once. You should be able to answer all of this. I think two we have already covered yesterday. Quantum of penalties, theory questions will not be asked. This question, second question, these are the types of questions what you can be expressed, which we discussed yesterday. This one and even the fourth one. Fourth, cognizable and non-cognizable. I hope all of you know what is that now. And also here, a simple question where a summon is issued to appear before the central tax officer, but he did not go. What is the amount of penalty? So in this case, response where a person issues summons and not response, he'll be subject to penalty under 122. You should identify the respective clause and answer. So these sort of small questions can be asked, but now since the case studies are also inserted, we can definitely expect questions which are similar to all the four case studies what we had covered. Definitely we can expect in the examination. So coming back, so therefore, since we completed this topic, any queries? Please feel free to post your queries. So since we completed this and we have some time left out, let us start the next chapter, which I was ideally supposed to address on, which will be there. The class will be there on the date is on 19th of December. So 19th of December was the date allocated to this chapter, appeals and revision. But since we have time, we'll just do a brief start, just get a hang of the provision, and we shall again continue the detailed discussion on the 19th of this month. So therefore here, what do you mean by the term appeal? Can anyone tell me? In cricket, if the bowler feels that he has got the batsman out, he will appeal to the umpire. That is the first time I ever heard the word appeal in my life. When I started watching cricket at the age of eight years, I started watching cricket when 96 World Cup disappointment happened. So therefore, at that point of time was the first time when I heard the word appeal. So can anyone tell me what do you mean by the term appeal? What do you mean by the term appeal? Why is this word used in the legal terminology? I'll wait for your answers. So technically, the word appeal refers to a request from a person to any other person saying that kindly listen to me and hear my side of the story. In simple terms, it refers to that. A request from a person to kindly hear his side of the story. So why it is important here is because we cannot allow a single officer or a single group of officers or proper officers, whoever are allotted to the GST taxpayer, to decide on what he has done is right or what he has done is wrong. We cannot do that. There should be some sort of mechanism given to the taxpayer to present his side of views to another person altogether, and not necessarily the proper officer. Because sometimes the proper officer, if see how it all works, first stage is I file the returns regularly. I do all the compliances. Second stage is he identifies some issues due to which he sends a notice to me. I make my representations. And though they say it is all online, ultimately in GST, where the state government officials are involved, and your mobile number also is there with them, they will straight away call you. There is no courtesy of messaging or emailing and all. Straight away they will call you and tell, sir, I issued a notice, kindly come and meet me. Now, in the course of doing these presentations to the respective state officer, sometimes what happens is there may be some sort of an argument with that respective state officer, due to which he may take it upon his ego and simply for small issues pass an order, ask him to pay the tax. Ask him to pay the tax. Okay, so that is why we cannot allow that particular officer to decide for its own, and that cannot be final. There has to be a mechanism where the taxpayer can present his side of the story to some other person. This is where the appeal will come into existence. So he will prefer an appeal. That means he will file an appeal. He will request the appellate authority. Here, appellate authority is the main person who sits and hears both versions. What does the tax department has to say? What does the GST department, GST commissioner has to say? And what does the taxpayer has to say? And then it will pass its appellate order. Fine. So that is the concept. So therefore, since the right to appeal is a statutory right, it is conferred by the statute, also places fetters. Fetters means certain conditions on the exercise of this right. Time limit has to be there. If you are filing an appeal, you need to have a time limit within which you can file the appeal. Also, in some cases, there is a requirement of making pre-deposit of certain sum. That is, you need to pay some amount of tax before the appeal was heard by the competent authority, are examples of such conditions. So, Chapter 18, 107 to 121 of the CGST Act, along with Chapter 13, rules of the CGST rules, prescribe the provisions relating to appeals and revision. What do you mean by revision? Revision means in case the order has some mistake, the commissioner may rectify the order from his side, or the taxpayer will have a facility to request the commissioner to relook at the order and make the necessary changes. That is your revision. So this is the hierarchy of appeals and revisions here. What exactly happens? First is adjudicating authority, and also first let us look at the appellate authority, then I will come to the revisional authority. Now, order which is passed by the adjudicating authority. Adjudicating authority means the main proper officer who has sent you the notice and who has looked at your submissions and who has passed the order. So this order which is passed by the adjudicating authority, he will pass the order. Now, if you are not happy with whatever order he has passed, he will file an appeal with the appellate authority. Okay, he will file appeal with the appellate authority. Then, if appellate authority also passes the order, that see, first stage of appeal is appeal with the appellate authority. Okay, now appellate authority is very much part of the GST department only. It's very much part of the GST department only. The next step, appellate tribunal, is governed by Ministry of Finance. I'm sorry, Ministry of Law. Whereas appellate authority is Ministry of Finance. Appellate tribunal, you will have judges appointed by the Ministry of Law will also come into picture. So therefore, that will ensure a further degree of neutrality. So therefore, first you will go to the appellate authority. Appellate authority will pass its order. If the taxpayer is happy, okay, he's passed the correct order, the issue is closed there. If the taxpayer is still not happy, he can file the appeal with the appellate tribunal. Please remember, appeal can also be filed by the department also. Sometimes what will happen? The proper officer, who is a slightly junior officer, will pass an order, but the commissioner may have a doubt that this person has not passed the correct order. Maybe the taxpayer will have to pay more penalty. He also can prefer an appeal to the appellate authority to relook at the order. Okay, then after appellate tribunal, the orders whichever are passed by the principal bench of the tribunal, final fact-finding authority is the Supreme Court, of course, the last resort. Then order passed by the officer. In case of revision, what happens? The subordinate officer passes the order, then it goes to the revisional authority. If the matter changes, it is well and good. Otherwise, it goes to the High Court and then the Supreme Court. All this is just a hierarchy. Once we go through the sections, you will have total clarity of what the flow is. Request for change a decision means, Mansha, I didn't understand. Was that an answer for your question? For the question or something relating to? I didn't understand the query. You can just relook at what you have typed and let me know so that I can help you out. Yeah, so some definitions here. Adjudicating authority, it means the authority appointed to pass any order or decision, but does not include the Central Board of Indirect Taxes, Revisional Authority, etc. Any person who is appointed to pass any order is adjudicating authority. Appellate authority is the authority appointed or authorized to hear appeal as referred in 107. Appellate tribunal means the GST appellate tribunal. Authorized representative means the representative referred to under 116. We'll cover what is that. It is basically any person like a cost accountant or a chartered accountant who is eligible to represent the taxpayer before the government. The board means the Central Board of Indirect Tax and Customs constituted under the Central Board. So these are a few definitions. Basic definition, just go through it, not very important from examination point of view. Commissioner means the Commissioner of Central Tax also includes the Principal Commissioner of Central Tax. Revisional authority is under 108. 108 covers the term revision. So in case of decisions or orders which you want to change it, you will have to, the revisional authority will have to do that. So 107 talks about the appeals to the appellate authority. We shall cover two aspects here. One is the appeal to the appellate authority by the aggrieved person, that is by the taxpayer who has received an order which he is not happy with. So he can appeal to the appellate authority. Also, the department can also appeal to the appellate authority. First type of appeal what we will see is appeal to the appellate authority by the aggrieved person. Okay, Mansa, I got it. Request for changing a decision. I got it. Because there's, I think there is some lag between me speaking and the queries. So I didn't know it was that few minutes back because the question was just 9 minutes as. Anyways, no problem. I got the clarity. Okay, so next, appeal to appellate authority by the aggrieved person. So what are the orders which can be appealable to the appellate authority? First one, an appeal against any decision or order made by the adjudication authority can lie before the appellate authority. Any sort of decision or any sort of order which is given by the adjudicating authority, which is the first stage of assessment, they say, that is your commissioner level, deputy assistant commissioner, first stage of assessment. You say there in that particular situation, whatever order is given, against that you can prefer an appeal. Only aggrieved person can file the appeal. Also, the appeal must be against a decision or the order passed under the act. If any decision or order is given against that, you can pass. Only the aggrieved person can file the appeal. That means if you have an order which you feel is not correct, you cannot file the appeal on some other person's name. You only have to file the appeal. Of course, you can have an authorized representative. The time limit for filing the appeal is given. You cannot give endless chances to the taxpayer. You have to draw a line somewhere. That is why he's telling 3 months is the time limit which is given. If you are aggrieved and if you feel that any decision is not correct, you can file the appeal to the adjudicating authority within 3 months from the date of communication of such decision or order. Date of communication. This is very, very important, friends, because you should understand that date of communication is important when it comes to calculating the number of days. So now the adjudicating authority passes the order on 10th November 2023, but you are receiving the order on 15th November 2023. The 3 months will start from 15th November, not from 10th November. I hope you are clear. That is why this word communication here is very, very important. That means when you are receiving the order, when you are being communicated to is important. Whatever date is mentioned on the order, that is not very relevant. That is not very relevant here. I hope that is clear. Condonation of delay. What do you mean by the term condonation? Can anyone tell me? Condonation. 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 Remedy, okay. Submission of application after due date. Okay. See, condonation means what? That means due to any reason, genuine reason, you could not fulfill the time limit which is given in the section. Section time limit is 3 months within communication of such decision or order, but there is a genuine reason. That is, you are traveling, you didn't know, or you are like traveling means outside India. Just within India, if you travel, that's not a valid excuse. So you can make a condonation application. It is a request to the department to allow more time for the purpose of filing the appeal because of certain reasons beyond the control of the taxpayer. So this he will file the condonation application with the appellate authority. Appellate authority, if he feels that there is a sufficient cause, the reasons what he is telling is correct, there is a sufficient cause for such delay, then he can condone the delay by only but up to 1 month, not more than that. So form APL1 is there in the GST portal. In that, along with the relevant documents, he has to submit. What are the relevant documents? The order what was passed by the adjudicating officer, whatever description of the case in brief, and why you feel that you don't have to pay the tax demand which is being raised by the adjudicating officer. You have to file that. And the moment you file this, a provisional acknowledgement is issued to the appellant immediately. So immediately you'll get a provisional acknowledgement. And one more important point here is, when the decision is uploaded on a decision or order appealed against is uploaded. See here, you can file the appeal, but it is very important for you to compulsorily attach the order against which you are appealing. See, adjudication of officer passed one order. You are filing an appeal against that. You can file the appeal, but the appeal will be taken into consideration only once you compulsorily upload the order which is given by the adjudicating officer. So therefore, in that particular situation, the decision, so a decision or order against is appealed against the common portal, then only final acknowledgement will come, which means for provisional appeal, you can always apply. You can always apply. You feel that you will not be able to succeed. I mean, this adjudicating officer will anyways ask you to pay the tax. So you can upload it on the portal and get a provisional acknowledgement. And then, but the final order of the adjudication authority should come, that you should upload it in the common portal. Only then final appeal acknowledgement will come. That is issued, and form number APL02. So APL02 is the form which is the final acknowledgement number. The date of issue of the provisional acknowledgement shall be considered as the date of filing the appeal. Fine. So therefore, so in this particular situation, first appeal you have to file in APL1, provisional acknowledgement will come. Then whenever you are attaching the order against which you are uploading, only then final acknowledgement will come. In that case, date of provisional acknowledgement shall be the date of filing the appeal. However, when the decision is not attached in the portal, self-certified copy of the decision within a period of 7 days you have to submit. So therefore, in case the decision or order is not uploaded on the common portal, because that person, adjudication officer, should upload that order on the common portal. I'll just give you an example here so that there is clarity. See, first what happens is decision or order given by the adjudicating authority. Okay, taxpayer files the appeal on the portal in APL1 and gets a provisional acknowledgement number. I hope this is clear. First decision order given by adjudicating. Now, this date of filing appeal. So, date of filing appeal is determined by when the decision or order is uploaded on the common portal. Okay. Sometimes the departmental officer may not upload it on the common portal, but will send a hard copy. Will send a hard copy to the office of the taxpayer. In that case, so when order is not uploaded, appellant shall file a self-certified copy of the order within 7 days. I hope you got the gist of this process. So here what is happening? Where decision is not uploaded on the common portal, he will submit a self-certified copy within a period of 7 days from date of filing the APL 1. From date of filing the APL 1. Within 7 days from date of filing APL 1. Okay, this is what is the provision which is given. Fine. After that, the final acknowledgement will come indicating the appeal number in APL 2. Now, there will arise a situation where common portal, the decision or order is not uploaded, and this person also is not submitting the self-certified copy of the order. So if you don't submit within the 7 days from the date of filing of GST APL 1, then date of submission of such order shall be considered as date of submission filing of the appeal. That means the appeal will be taken into a consideration only once the self-certified copy of the decision or order has to be submitted. Only then it will be taken. So in this further circumstance, when self-certified copy not uploaded, not filed within 7 days, date of appeal shall be the date on which the self-certified copy is filed. I hope you got the clarity. This is the procedure for the appeal by the aggrieved person taxpayer, and the date of filing of the appeal, the time period of filing of the appeal is what is important here in this particular situation. Okay. So that was your this thing. And also pre-deposit we will see in the later provisions, but you cannot file an appeal before the adjudicating authority unless a specified amount of pre-deposit, you need to pay some tax, only then the appeal can be filed before the adjudicating authority. Now, examples of what we discussed: appeal you file and provisional acknowledgement is issued on 10 September. Taxpayer submits the certified copy of the order sought to be appealed against on 15 September within 7 days. Then date of filing appeal is 10 September. However, if he submits it very late, more than 7 days on 25th September, date of filing the appeal is 25th of September. Fine. So therefore, this was your appeal to the AA by the aggrieved person. When it comes to application before the AA by the department, it's a slightly more longer process which talks about the review application and all. So this we shall continue in our next session on the 19th. So therefore, in today's session, just to summarize, we covered 138, the compounding of offences, compounding application in various cases which can be filed. We looked at the ethical aspects, the image of a chartered accountant when it comes to GST, the competence level, honesty, true and fair view, all these things we covered. You'll also cover all of this in the ethics related topic in your advanced auditing. And we also looked at 4 case studies, interesting case studies, which speaks about multiple things which are offences and in what ways are they dangerous to the chartered accountant as well. And then we started the appeals chapter, looked at the definition and also the type of appeal which are to be filed. We started with the appeal by the aggrieved person, and in the next class we will look at the appeal to be filed by the departments, appeal to be filed to the GST Appellate Tribunal, High Court, and eventually the Supreme Court. These are all will be covered on 19th, and if the time permits, let me see, if the time permits, we'll also look at any other small topic like advance rulings or job work provisions on 19th of this month. So any further queries? I'll just wait for 5 minutes. So thank you very much everyone for attending the session. I like the interactive nature of all of you, considering the fact that we are looking at all the dry topics. That is what they say in CA, which talks about the theory topics. They always say it is a dry topic because all the most interesting, the practical ones are in module number 1 and 2. Module 3 are the dry topics. But I sincerely appreciate the interactive nature of all of you, because only if you're interactive, you can listen to all these theory oriented topics in detail and can follow that. So thank you very much for again being interactive, and we shall continue the same level of interaction in our next class, where we will continue this particular chapter, and if time permits, a small chapter as well. So as always mentioned, please feel free to post any of your queries. We shall definitely look at them. Even in the next classes pertaining to this class and yesterday's class, if you have any queries, please keep asking. Thank you very much, everyone. Good night and see you on the night.